Broadcasting from the beautiful Great Lakes state of Michigan, I'm Tom Bartholomew, your host of the Michigan Contractor Show. And I worked in the construction industry for over 25 years. I started on a job site when I was 14, working for my dad on a vinyl siding job. Now I spend all my time running a digital marketing agency where I help contractors and companies in the skilled trade promote their business and reach customers in ways they never thought possible. Again, my name is Tom, and let's get to today's guest. My guest today, Progressive Commercial Finance. They're a source of immediate working capital for businesses nationwide desiring to grow and expand. And they serve a multitude of industries. And I want to welcome to you my guest, Dennis Gilbert. Thanks for joining me today, Dennis.
Well, thank you, Tom. It's great to be with you. And I love the opportunity to speak to your listeners. And I want to tell you a little bit about my history and Progressive Commercial Finance. I started in the alternative lending industry many years ago. It was not a choice. I was actually led into this industry by a mentor. But once I got into it, I realized that there was such a need for it. I've never worked for a bank. I've never been a banker. Because we all know that banks are great, but they can be very tricky to work with. And because part of our industry is not regulated like the federal banks, we can bend the rules a little bit on certain criteria in funding and financing. So although I finance in many different industries, one of the interesting ones is the construction industry. And what we do, we finance a lot of subcontractors around the country because in most times the large developers are financing these projects of building these large commercial buildings and shopping centers. They're funding them on the backs and shoulders of the subcontractors. The subcontractors are really the ones that put out most of the money. And then they keep waiting 30, 60, and 90 days to be paid. It's difficult for them to bid on larger contracts and even to finish certain contracts. So what we do is we try to set them up with a credit facility based on their work progress draws and accounts receivable so that we can put some money in their hands up front. And by doing so, they can make their payroll week to week, and they can buy materials and have better cash flow. And part of what's interesting about it is that some of the subcontractors come to the table with credentials that are not AAA perfect. And why is that so? Because it is the entrepreneurs, the ones that take a chance in business to grow their business, not the ones that get a steady paycheck every week, but the ones that take the chance. They're the ones that have some credit challenges. That's the irony of the whole thing. And that precludes them from going to the neighborhood bank and just getting more money. So what we do is we leverage the strength of those accounts receivable coming in to add to the borrowing criteria of that subcontractor. Because the big prime contractors that are the ones that are paying them are, stronger credentials than the subs. So we look at those accounts receivable and we can keep throwing money at the subs so they have the ability to bid on larger contracts. Whereas the bank, they might have given them a better interest rate, but they might top them off or cap them off at $50,000. What happens if that sub wants to bid on a nice contract for $300,000? The bank is not going to triple that credit line just at the snap of the fingers. But we will do it because those accounts receivable coming in, may be stronger than the person we're actually giving the money to. So I don't want to be too circuitous, but that's the way I begin to explain it.
No, I think that's wonderful. There, you really unpacked a whole bunch of stuff there. I would, so it sounds like what you do, since you're not tied in with the, Federal Reserve or the banks and whatnot, that you're able to do some unconventional type loans and work with people that maybe don't have the best credit, like you said, have some subpar, or, because a lot of times when you're first getting into business, you really, I mean, I'm 1 year into running my digital marketing agency right now, and I can understand that, you got to put a lot of money out of pocket at first when you are starting a business. So maybe your credit's not so good. So these are the type of people that they can come to you and you can help them with their financing.
Well, that's true. Banks are highly regulated, and that's with good reason. Our industry is not regulated like that, so we can bend the rules a little bit. I mean, we might take a look at a business that's doing very well, but maybe 1 year they purposely showed a loss on their tax returns for tax purposes. The banks cannot take that loss on the tax return and give you more money. We can, because we look at the activity and we can see that the business is doing okay. They just need more money to grow the business, and that's what we provide: access to capital to help them grow.
I think that's wonderful. Now, so when we talked last time, I know, Dennis, you had talked about that you really kind of, you kind of take it on a job by job basis. So if I come to you, what do I need to do to qualify? Like if I'm just getting into business, I just got my builder's license, or I've just started my subcontracting company. What do I need to qualify, or how can you help me in the beginning?
In a perfect world, we want you to have some revenue coming in, some contracts or jobs that you're working on, which you're providing services for another creditworthy end user, customer. We don't care so much if you're creditworthy. We'll give you money all day long, even if your credit's not that good. But we want you to perform jobs for creditworthy companies, because ultimately they're the ones that are paying the bill. And so really what you need to qualify, we don't care if you've been in business 3 months, 6 months, 9 months. And we just want you to have the ability to take on good jobs. That is the leverage. And we will support those jobs and give you cash flow. See, this is not a single loan. This is an ongoing process. And you can actually use us when you wish to. You don't have to use us all the time. You might take on 3 construction contracts. One of them is paying you in a week to 10 days, although that's unusual. Let's assume that it happens. Well, you don't have to use us on that job. You might just want to use us on the job where the end user is paying you in 45 days. That doesn't mean they're a bad customer at all. They're a good customer, but you're going to play by their rules, not your own. So you're going to wait 45 or 60 days to be paid, and that's hard on you. So we will give you money on day one so that you can make your payroll, have cash flow, and buy your materials, which the end user is expecting you to do. And I'll take it one step further. I finance many different industries, manufacturing and service companies. But what's unique to the construction industry is once we give you money up front, if that prime contractor or developer fails to pay you or goes into bankruptcy, you do not have to give me the money back. It is my loss, not yours. That's what we call non-recourse. Back to you, non-recourse to you, the subcontractor. Now, the exception is, of course, if your contract was to paint that building blue and you painted it green, well, that's your problem. Then you do have to give the money back. But as long as you did what you're supposed to do, we assume the risk. We guarantee that end user, and if something goes wrong, you do not have to give the money back to us. It's non-recourse. So that's a good feature. It's not always about the interest rate. It's about the other services within that process.
Okay.
And it is related to what's known as factoring. Like I said, it's not a single loan. It's an ongoing process to help you build the business.
All right. So I just get, hypothetically, I just got into business. I'm going to start doing some subcontracting. You want me to have a couple jobs already under my belt, where I can show where I've done some work. And when would I come to you after I get the job, before I get the job? When would be a good time for me to, like, I'm going to be bidding on this job. Where should I go next?
Right. Well, it's always a case of which came first, the chicken or the egg. Actually, once you take on a job, let's say it's going to be paid to you in 5 different increments. We require that you perform the first week's worth of work without my help. We want you to be able to at least generate the first invoice on your own. So let's say you perform $10,000 worth of work. You generate an invoice. You send the invoice to your end customer, and you send a copy to me. We verify that the invoice is a real one, that you actually did perform some work, and then we advance to you 70% of your $10,000 in one day, automatic transfer into your bank account. Now, the other $3,000 is your money, not mine. But we wait. Let's assume it's 30 days. We wait for you to be paid. That other $3,000 is yours. Then we take our fee, which is usually around 3 points, which is $300. So on the $10,000, you get $9,700, and we get $300. That's a general school 101 example. Now, let's say you need money to start a job that you're not able to perform the first week's worth of work. Well, then what we're going to do is look to 2 or 3 of your other jobs that you might have performed, and you're already waiting for money to come in on those other jobs. So we might give you money on those other jobs so you can use that money to start this new job. But yes, it's not a perfect world. We do require for you to generate some income so that we can then start putting out the money. And what we can do that the banks won't do is, let's say the banks will give you a very good, rate, but maybe they cap you off at 50,000. Then you bid on a very large job. Our money is unlimited. We don't care. You can jump from a $30,000 job to a $300,000 job. We'll still finance it for you if these 2 or 3 criteria are working positively. We require that your customer be creditworthy, not you, but your customer. We like to be in first lien position. So if your company already has an SBA loan standing in front of me, that could be a deal killer in certain cases. And the only other criteria really is that we're asking the prime contractor who you're working for, or the developer, to reroute and direct the check to me, not to you, because we've already given you money. Now, they can make it payable to you, not me. It's your money, but we want it sent to my bank account because we've already given you money up front. So there are a few issues. There's a few more. There are some cases where if the sub is required to post a performance bond, we have to look more deeply into that, because in most cases, the bond will stand in front of me to collect if the whole job goes south. So there are some criteria we have to look in. But for the most part, we are simply advancing money to you ahead of time against future receivables coming in.
Well, I think that sounds excellent, especially on you were saying you can even look at maybe some other jobs you have going on, and you don't have the cap like a lot of the banks do, like you had mentioned. I think that's, great. So maybe if I've been smaller and I'm now looking to expand my horizons and take on some bigger jobs, I could do that with your help, where maybe I wouldn't be able to with the bank as easy.
Yeah. We like to fund a minimum. It's not 100% carved in stone, but we like to do a bare minimum of about 15 or 20,000 per month. If you're looking for a small loan of $3,000 or $4,000, that's not really for us. That's a micro loan. We don't handle it. We would prefer that you're a business that can generate about $500,000 in gross annual revenue and higher. It's not 100% carved in stone, but there are some guidelines to it. It's not micro lending.
Sure. That makes a lot of sense. I can understand that. So I really like that. What happens if the contractor who I'm working for all of a sudden stops paying? Am I the contractor in charge of having to get an attorney and get that collection, or how does that work?
Well, in most cases, I step into your shoes. In other words, I have the right to collect on those receivables. We certainly don't want to disturb the end customer because we're on the same team. We want it all to go smoothly, but we do notify them that we are participating in financing the subcontractor or the smaller contractor, and if if they don't pay, we do have the right to go after them for collection because we've taken possession of that future account receivable. We've given you money up front already, so we are taking that off your shoulders. While we don't want to upset anybody, we do have the right to collect, and we will pursue that. So we take that load so that you don't have to hire another person for 40 or 50,000 a year to collect those receivables because we take that function off your shoulders.
Well, I think that's very helpful because a lot of times, especially if I'm first start getting into it and I'm starting to build, maybe I don't have the know-how or the connections or whatnot to be able to do that. So that's another added benefit of your services. So what do you see a lot of your contractors, the subcontractors, what are they using your money for? What are they besides maybe buying some material? What other things are maybe they use that money for?
Well, the most common things really, it's quite simple. Payroll, materials. I have to let you know, in the construction industry is different legally than many other industries. There are very strict laws that require you, the subcontractor, or if you're a general contractor, you really cannot use that money just willy-nilly. You have to make sure that you're paying your second tier subs, and using the money to help with that job. You just can't take the money and go on vacation with it. It's more strict than in other industries. There are laws that are stricter in the construction industry for good reason. So it's really just for the job: payroll, materials, cash flow, and the ability to bid on other jobs.
What about equipment leasing? What if I needed to lease some equipment? I've gotten a bigger job. Obviously, I don't have the equipment because I haven't done it before. I need to lease it. That's common practice. How about that?
We will absolutely help you with that too. We're a little bit stricter on that because we do want to see that you can justify the cost of that equipment. You can't just come to me and say, I need a piece of equipment for $200,000. And I'll try to bid on a contract 6 months from now. That we can't do. We want it to be justified in real time, that you can support the extra payment on that. It's a slightly different program than advancing money against an invoice that you've already sent to your customer. But it's not a perfect world, but we are on the same team. We try to work with the contractors as best we can. We're looking for relationships, not just a single one-time advance. So, we try to give good advice and do the best job we can.
Well, Dennis, you know what I really like and why I was excited to have you on today is that you're really trying to be a partner with them, not just a lender, not just somebody that they have to, they're trying to get money from. You want to help them out. You want to help them, with the financing so that way they can work on from job to job, not just one job, a lot of the jobs. So I think that's great. And the equipment financing, have the job first, then get the equipment lease financing.
I'd like to add one more thing, that in this type of financing, the subcontractor or they have to build some margins into their work. If they are performing their work on a very small margin, like 5, 6, 7, 8%, they cannot do this type of financing because we are leveraging off the commissions off their margins. Now, they could try to build in the money that they're going to pay to me, they could try to build it into the job. But if they can't, in order to be competitive, they have to know that they're, working on a good margin, maybe 15 or 20% gross profit margin, in order to do this type of financing. They can't work for free.
Well, I think that that's true in no matter what industry we're in. And I'm sure if they've gotten to the point where they're needing your help, they understand about adding that into their job bids. So I'm sure they can get that figured out. Well, I think that's great. Anything else that you would like to add about how you can, you've given us a lot of great information today. Anything else you have to add?
Well, I think just to reiterate, the most common reasons why clients are coming to me and not the banks is maybe they have a lower FICO credit score, or they showed a loss on their tax return, or they had a prior bankruptcy 3 or 4 years ago. We don't care about that. Or maybe they're a little too young in their business. Banks like to see 2.5 or 3 years in business. As I said, we'll take you on with 6 months or a year in the industry. Or maybe you have a low net worth or even a negative net worth. We will still try to help you, because we are not highly regulated as strict as the banks are. So, it costs nothing to brainstorm a situation. I do not approve 10 out of 10 cases, but at least I will try to give the best advice that I can.
Well, I think that's great. And I think you've given a lot of great advice here today as well, Dennis. I know they can find you at letsgrowyourbiz.com. And I'll put that in the show notes so they can find it easily. They can also find you on LinkedIn. And sounds great.
Right. They can send an email to Dennis at letsgrowyourbiz.com. And for a shameless plug, our phone number is 410-596-0439. Thank you for letting me put that in.
Yeah, absolutely. And I'll put all that in the show notes as well, Dennis. Thank you so much for joining me today and being on my show.
I enjoyed it very much. Thank you.
Great, thanks. And if you like this show, go ahead and let me know down in the comments below, and go ahead and subscribe to the channel. Hit that bell so you'll be notified every time we come out with a new episode every Tuesday. Thanks for watching, and we'll see you next time. If you would like to be a guest on this show, head on over to MichiganContractorshow.com. Fill out the form, and I'll get back to you with a good time and date to get you as a guest on this show. Thanks again for watching, and we'll see you next Tuesday.